Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 17th of May 2024. The first chart is the US Dollar Index Futures, and we've been looking at this price level of 104 for quite some time now. It's been an important level over quite an extended period of time now. This week, price has come back and it's tested this level for strength. And there has been some buying support emerge from the market, which has allowed the market to close back right at the highs of the range here, effectively adjacent to this bar's low. It's not particularly strong buying support at this stage, but there has been buying support emerge, as you would expect at this important level when price is coming down and testing it from above. So we'll look through some of the other charts and come back to this at the end and see if the other charts are inferring what the market is expecting to happen. Next chart is the E-mini S&P. This is S&P 500 Index Futures. You can see price has been moving steadily higher for quite some time. There was a gap up here, which was a little concerning at the time, especially as price did move lower in response. Since then, price has recovered and has come back to close right at the highs of the range this week. Now, if price is able to move higher from here, there may be a test for supply at some point and then a push higher. But if price does push higher in response, then all of this in the background will act sort of like a shakeout and offer strength in the background and support the push higher. So this pullback, while it was a little disconcerting at times, especially with a gap up in the background, it will act similar to how a shakeout, a pullback and recovery, if you like, and offer strength to the market if it attempts to push higher in response. And that's what it looks like it's going to do. It may test for supply initially, especially at this important level. You'll get a little test for supply here early next week. And then if supply is found to be low and trading conditions are favourable, a push higher in response. US Treasury 10-year note futures, and they were in position to push higher this week. You saw last week a little absorption bar, test for supply sort of bar. It's not a particularly clear one, but the consolidation period was right up high in the range, right up high in this bar's range here, which in itself was suggesting the market was absorbing supply and preparing for a push higher. Now, the market did attempt to push higher, but the resistance, the supply drawn out from the left here, has forced the market to close back at this old breakdown line in the background. Whenever price challenges a breakdown line, it's always difficult to recover back above it. Almost always there'll be supply, trapped supply to the left, like through here in this case. And that'll be drawn out as price recovers back above it and cause resistance to the market recovering back above the breakdown line. And that's why when a market does recover back above a breakdown line, it's always a sign of strength, because it's a difficult thing to do to make this recovery, to make this transition back above a previous breakdown line. So the market was forced to close back below it this week. That doesn't mean there won't be a second go. I would expect initially next week a little test for supply early on to recover. And then if supply is found to be low, a secondary challenge towards that breakdown line here. So the last two charts both infer a test for supply early and then a push higher in response if selling pressure is low and trading conditions are favourable. And that sort of infers so far the market believes the US dollar will come back and retest that 104 level. Copper price futures look a little overextended this week. Price really accelerated higher. It almost looks climactic. We'll see. In fact, maybe we should look inside this one. This is the daily chart looking inside the weekly price movement. 1, 2, 3, 4, 5. So this is last week's trading. You can see price has moved higher. 1, 2, 3, 4, 5 on modest volume here, then really accelerated higher on really extremely high volume. It's closed about mid-bar, so supply has been drawn out. You'll probably find the market dipped lower initially on the next bar, then pushed higher, drew out supply again, and closed below mid-bar. Volume was a little lower, and spread was increased. So that suggests the buyers were holding the upper hand here. Next bar was a test for supply or a pullback to challenge the sellers, and volume dropped to about average. So that suggests that sellers were reduced and the buyers probably continue to hold the upper hand. And then the next bar pushed higher with an increased spread. It's the highest close for the week on only a very slight increase in volume, about average. So that looks like the buyers have absorbed the sellers. It doesn't really look like the sellers are taking control. So that probably isn't a climactic bar. Although if you're following markets like this, when a market does this, which we've seen, here was the old range, the breakout above it. This was the consolidation bar from the highs of the range. Here was a period of bullish absorption. And now prices accelerated higher with a really wide spread on extremely high volume. That will often prove to be climactic. Now we've looked through it and we can see that supply was drawn out in the top here, but it does look more like the buyers are holding the advantage over the sellers, at least at this stage. So we'll see what we get next week. There'll probably be some testing for supply early, and then I reckon there'll be a further attempt to push higher if trading conditions remain favourable. And we'll see what comes of it then. If you do see very high volumes, very narrow spreads, then the sellers may be getting the upper hand. But we'll see what happens next week, particularly early next week. Gold price futures. Gold price futures are looking a little more comfortable. We saw supply drawn out here and a pullback in response. And since then, price has pushed higher again. And this week has closed back above the highest previous close here. Now, this isn't yet a breakout. It's perhaps an attempt to break out, but you've got this pullback in response to where supply was drawn out previously, and sort of similar to the E-mini S&P market. If price is able to pull back and recover, either just accelerate higher or retest the breakout here at 2400, then this pullback and recovery will act as though it's strength in the background, similar to how a successful shakeout supports a further push higher. So this market's looking pretty comfortable at the moment. It's certainly not looking overextended like the copper market is to some extent, but it looks comfortable and it looks like there'll be a further attempt to push higher, perhaps with a test for supply. But the volume down here doesn't really suggest the market requires a test for supply. Generally, it'll pull back and test for supply if there's been excessive volume drawn out, and it hasn't really. So if the market's comfortable in doing so, more for marking time, waiting for timing to be right, rather than needing to because volume was excessive. Silver price futures is always a little more exaggerated compared to the gold market. Similar to gold, price drew out supply on this bar and pulled back in response, and the market has pushed clearly above the previous highs, perhaps a little overextended, you might say, similar in some ways to the copper market. Now, this market's always more volatile than gold. When gold's coming back, this market comes back further. When gold's moving higher, this market will move even higher. and that's what's happened this week. Prices really accelerated higher. Volume, however, was only about average. What that means is that sellers were very light this week. Selling pressure was low, and that allowed pretty much average volume. It was increased volume, but only about average, to really move price higher because there was very few sellers in the market. The buyers dominated, and that forced price to really stretch higher. So there's no need in this market for it to test for supply either, but with spread being so wide, you would almost guarantee there'll be some testing for supply early next week, because very large gains over a very short period of time will always draw out increased supply. That'll be people shorting because they think the market has overextended. That'll be people taking profits where they bought lower and it's time to take some profits. So I would expect there'll be a test for supply to some degree early next week, almost certainly, because the market is a fraction overextended in the near term. If selling pressure proves to be low, or the market is comfortably able to absorb the supply that is drawn out, you'll find the market will attempt to move higher if trading conditions remain favourable. But there'll probably be a pullback early in the week to some degree, and then price will move depending on trading conditions and how much supply is actually drawn out. Light crude price futures have this buying support in the background and then a period of bullish absorption. Here's the previous breakdown line. It comes through there. Price did move above it. The demand sort of faded out here, but price has moved back to this level, dipped below it, and is now attempting to find support adjacent to this bullish absorption. And it appears to be doing a reasonable job at it at the moment. So I'm expecting the market to continue trading between 81 and 77 in here. It's a little comfortable spot. The market has supported at that level previously with this bullish absorption to the left. There is difficulties above 81, above here. So this is the sweet spot at the moment. In here, just below 80 or up to 80, and not much higher than 81. This is the Euro US dollar currency futures. Price did accelerate higher this week with the weakness in the US dollar. This is the important level here. You can see price pushed up to it last week with a test for supply, inferring the market was well positioned to push higher, which it did this week. Now, the next higher level is a little confusing on this chart. It's a bit more clear on some of the others. But you've got a level through there, which is just below the 110 level. And I would expect this market to push into that this week, especially if there's a little bit of further weakness or retesting of the 104 level on the US dollar index futures. So just below the 110, there's a level here where I would expect the market will be able to push up to. It'll be a little more difficult to push above it. You can see when price pushed above it here, supply was drawn out the very next week and price came back in response. But moving up to this level, the market's done it many times. So this level in here is probably a comfortable level the market can move to in the near term, and perhaps will draw out some supply if it moves above 110. British pound currency futures are similar in some respects. You can see price move through here. Now, it's interesting to note that sometimes these lines fine-tune themselves, and the line really did turn into that level in the end. This was the initial level I've been marking, and you can see that it caught the market here, but price dipped below that level before it broke down on this bar, and this is the level that seems to be more respected at the moment. So it's been fine-tuned a little bit, or that's how I consider it, and price broke above it this week. Here's the highs of this range here. You can see price pushed above it here, wasn't able to maintain that level, pushed above it here, and immediately pushed lower in response. So here's the highs of the range here. Price is almost up to it this week, so there may be some testing for supply below this level, and further weakness in the US dollar will probably see a challenge to it. Whether it'll be successful or not is debatable. We'll have to wait and see. There's possibly a level that goes through there, although it's an older level, so I'm not sure how strong that will be. It did catch the market here, so we'll watch that if price does move above and start to challenge the 128 level. Aussie dollar currency futures, and they also moved higher this week with the bit of weakness in the US dollar index futures. The highs of the range sort of go through there. Prices moved above it. Your next level's there. That's where price tagged and came back to settle comfortably within this range. The next level comes through here. You can see that the market pushed up to this level previously and failed before it moved lower and broke down here. So the market's moved into the obvious level at the moment. Volume was not excessive. In fact, it was a little bit reduced, which shows that selling pressure was low in the market this week. I would expect the market to make an attempt to push higher this week up towards the 68-cent level. Now, I think this level here that I've marked through here has proved to be pretty strong resistance previously. So I expect if the market does attempt to push higher, it will remain within this zone at least for a period and absorb the supply that will be drawn out in response to that, because price hasn't moved up to this level since early this year in January. You can see down here where this breakdown bar is there. So there'll be some supply drawn out at this level, and that'll probably need to be absorbed if price is going to make any attempt to push higher. In the meantime, there may be a test for supply early, as there often is in currency markets at the start of a week, and then an attempt to push higher and perhaps absorb some of the supply in this little zone here. Bitcoin futures. Bitcoin futures recovered somewhat this week. We've been looking at it for many weeks, suggesting that the market appears to be absorbing supply, but we kept on getting down bars in response, and there didn't appear to be any great strength in the market. But when we looked inside some of these bars, we saw the buyers appeared to be holding the upper hand and not necessarily the sellers. So we've got the up bar this week. Prices pushed up to the logical level, and this period here is looking more and more like consolidation and absorption. Now, a push above this level or a push above a test and then a move above this level would confirm this as buying support in the background and would help to support a further push higher. Now, volume was increased, but it was still modest, so there's no need volume-wise or supply-wise for a test for supply early. This market does test for supply quite a bit, not always, but when price is consolidating like this, you'll get test for supply. Have a look back here. You've got plenty of testing for supply. When price is moving higher, there's no test for supply. When price is consolidating, there is a test for supply. And a push up here, there was some testing on this bar there, so it can do. I would expect an early test for supply in this market, if nothing else, just to see how the market's responded to the gains this week and if any supply is drawn out in response. And that will look something like this. It will pull back with a relatively narrow spread, probably close back up near the highs of the range, and then see how much supply is drawn out. If supply is low and trading conditions are found to be relatively favourable, I would expect an attempt to push higher in response. if supply is drawn out, you'll probably find the market does pull back again a little bit more deeply and challenge those sellers. So your first couple of days next week will depend on how much supply is drawn out, and then I would expect a strong response if supply is found to be low. You might find the market does move up, challenge these previous highs through here, and that would be a challenge towards the 70,000 level if successful. Okay, back to the US dollar index futures. This 104 level has proven to be an important level for some time. Now, many of the other markets are suggesting they would like to go higher. So that probably suggests this market will continue to trade either sideways or even challenge the 104 level. Those other markets, many of them appear as though they would like to go higher, and that infers this market will either move sideways to lower in response. It's not a guarantee, but that's how those markets suggest price will trade in this market next week. Probably sideways, I would suggest, and attempt to recover. So you'll get bars that look perhaps like this on a daily basis next week. And this will be the market attempting to consolidate around the 104 level, and it'll probably be unclear if the market will successfully consolidate at that level or not. Obviously, a clear breakdown, particularly if there's an attempt to recover that fails, we'll see the market move lower in response. So this is a key market to watch in the near term, and what happens in this market will help you understand what's happening in those associated markets. Okay, thanks for your time. We'll be back again next week. Thanks again. See ya.